Welcome back to the Deep Dive. It is Friday, February 6th, 2026.
Hello.
Today, we are doing something a little bit different. We usually focus on what's happening right now, this week, this month.
The immediate present, yeah.
Exactly.
Yeah.
But today, we need to look back. We are sifting through the wreckage of something, a collapse that's still, I think, smoldering in the landscape of the global economy.
It is. I mean, the site was officially cleared just a few months ago, but the scar, the crater it left behind, that is going to be there for a very, very long time.
We are talking, of course, about the China Evergrande Group. And I know what you're probably thinking if you've been following the news for the last 5 years.
Oh, that story.
Right, I know this story. Big Chinese real estate company took on way too much debt and went bust. End of story.
And that is the headline, yes. But that's like saying the Titanic was just a ship that had some trouble with ice.
Right.
It completely misses the sheer scale, the mind-bending complexity, and frankly, the absolute absurdity of what actually went down there.
It really does. Because when we started digging into the source material for this, the court filings from Hong Kong, the regulatory reports out of Beijing, the bankruptcy proceedings that happened in Manhattan, of all places, we realized this story isn't just about buildings.
No, not at all. It's a story about the largest human migration in history. It's a story about electric cars that never really existed.
It's about pig farms that were maybe not really about pigs.
Exactly. It's about a soccer team that conquered a continent and a financial fraud so massive it makes a company like Enron look like a rounding error at a lemonade stand.
That is the part that just floors me every time I look at it. The numbers. We're talking about a company that, at its peak, was the most valuable real estate brand on the entire planet.
Their revenues were over 500 billion yuan.
And now, as of August 2025, just a few months back, it's gone.
Poof.
Wiped out. Delisted from the Hong Kong exchange. That ticker symbol, 3333, it's empty space now.
And that empty space represents hundreds of billions of dollars. So our mission today is to get past those headlines. We want to understand the mechanism of the disaster.
Yes. How do you actually fake $78 billion in revenue? I mean, what does that even look like?
And how do you fool some of the world's biggest, most respected auditors while you're doing it? And maybe the biggest question of all, why did a guy who was brilliant at building apartments suddenly decide he needed to sell bottled water?
And build a theme park and start an EV company. We're going to find those red lines that were crossed, both the government's literal red lines and the ethical ones.
But to understand the collapse, I think you're right. We have to understand the height, the peak of the mania.
We have to go back to the beginning.
Back to 1996, Guangzhou in southern China.
So set the scene for us. 1996, I was definitely not paying attention to the Chinese property market then. What was the vibe? What was the environment that allowed this to happen?
You really have to visualize the single greatest construction site the world has ever seen. That was China in the mid-90s.
Wow.
This was the absolute dawn of the mass urbanization policy. The government in Beijing was actively, explicitly encouraging millions and millions of people to leave the countryside, to leave the farms, the small villages, and move into the cities.
And the numbers on this are just staggering.
They're almost unbelievable. We are talking about roughly 20 million people moving into urban centers.
20 million people.
Every single year.
Hold on, let me just pause on that. That's like the entire population of the state of Florida or Australia deciding to pack up and move to a new city every 12 months.
For more than a decade straight?
Yeah.
And all of these people, they need a place to live. They need roofs over their heads. They need apartments.
Right, they need housing.
And into this massive vacuum of demand steps a man named Hui Ka Yan, or Zhu Zhan in Mandarin.
And he founds a company. At first it's called Hongda, but it eventually becomes Evergrande.
Exactly.
And this founder, Hui Ka Yan, he wasn't from a wealthy background or anything, right?
Yeah.
He didn't come from money.
Not at all. Very, very humble background, grew up in rural poverty. But he had this incredible, almost predatory instinct for what the market wanted.
Which at first wasn't luxury condos.
No, at least not initially. He wasn't building penthouses for billionaires. He was targeting the new rising middle and upper middle classes.
So the people getting their first real jobs in the city.
The factory managers, the office workers, the people who were finally earning enough money to buy a piece of what was being sold as the Chinese dream.
So he just rides this enormous wave of urbanization. And the growth is, the word explosive doesn't even do it justice. It's violent.
It really is. They have their IPO in 2009 on the Hong Kong Stock Exchange. They raise over 700 million US dollars.
Which was a huge amount of money back then.
A fortune. And from there, it just goes vertical. By 2017, they're the second largest property developer in all of China by sales. By 2018, just 1 year later, they become the most valuable real estate company in the world.
And during this time, they became part of this kind of exclusive club at the top, right?
Right.
There was a nickname for them.
There was. In the industry, they were known as Wan Hengbi.
One Hang Bi. It sounds like an ancient dynasty or something.
It kind of was in a corporate sense. It was the big three. Wan stood for Vanke, which was another huge developer. Heng was for Hengda, that's Evergrande, and B was for Country Garden.
So these were the three giants.
These three companies were, literally reshaping the skyline of practically every major city in China, and a lot of minor ones too. They were active in over 170 cities.
But Evergrande was different from the other two. There was something in their DNA that made them stand out and ultimately made them more dangerous.
There was, in one very specific, very dangerous way.
The leverage.
The leverage, the debt. Hui Ka Yan absolutely loved debt. He was pathologically aggressive with it.
So while a company like Vanke was maybe a little more cautious,
A little more conservative, yeah. Evergrande was just running on pure, high-octane financial fuel. They became massive players in the global junk bond market.
okay, let's break that down, because we all hear the term junk bond thrown around. For someone who isn't a Wall Street trader, why on earth would you buy a bond that has the word junk in its name?
The very fair question. The answer is one word: yield. The interest rate.
The return you get.
Exactly. When a safe investment, like a U.S. Treasury bond, is paying you maybe 2%, Evergrande comes along and says, give us your money and we'll pay you 10% or 12%. Or sometimes even more.
Wow.
So if you're an investment manager in New York or London or Tokyo, that's incredibly tempting. You take that risk and you justify it to yourself. You say, well, it's one of the biggest companies in China. It's a national champion. Beijing will never let it fail.
The classic too big to fail argument.
The ultimate moral hazard. It defined the entire market for a decade.
But the junk bonds were really just one part of their funding,
Yeah.
right? There was another layer to how they got their cash that was even more, let's say, creative.
Oh, yeah. Much more insidious than just the bonds. It's a model we call supply-side finance.
This is something I really wanted to dig into. Because on paper, it seems simple. They borrow from banks, they sell bonds. But in reality, they were borrowing from everyone. Their own suppliers, their own customers.
Everyone. To really get this, you have to understand the pre-sale model, which is common in China.
Right. You buy the apartment before it's even built.
Correct. You, the home buyer, will go to an Evergrande sales office. You'll see a model of a building that's just a dirt plot right now, and you'll pay the full amount in cash, or you'll take out a mortgage for the full amount years before you get the keys.
So Evergrande gets all this cash from thousands of buyers up front.
Exactly. They have this enormous pile of cash, but they still have to actually, build the building.
Pay for the concrete, the steel, the workers.
Right. But here's the genius and the poison of their model. Instead of using that homebuyer's cash to pay the construction crew or the cement supplier or the painters, Evergrande would issue them something called a commercial acceptance bill.
The commercial acceptance bill. That sounds very official and important.
It does, doesn't it?
What is it, really?
It's an IOU. That's all it is. It's a piece of paper, a promise that says Evergrande will pay you, the cement supplier, 1 million yuan in 6 months or 9 months or a year.
So the cement guy does all the work, delivers all the materials, and gets a piece of paper for his trouble.
He gets a piece of paper. And here's where it gets even crazier. Because Evergrande was so massive, so seemingly powerful, these pieces of paper, these IOUs, started circulating in the economy like currency.
What do you mean?
The cement supplier, who needs to buy sand and gravel, would take that Evergrande IOU and just give it to the quarry owner as payment.
And the quarry owner would accept it.
Yes, because he could then take it and give it to a trucking company to pay for fuel. Everyone accepted them because they all believed that, at the end of the day, Evergrande was good for the money.
So they were essentially printing their own private money, a parallel financial system based on their own creditworthiness.
In a way, yes. It was a brilliant and terrifying way to extract liquidity from the entire supply chain. They kept the home buyers' actual cash for themselves, and they paid their suppliers with promises.
And that cash they kept. They used it to go buy more land, to start the cycle all over again.
Exactly. It is a perfect money printing machine. It works beautifully as long as two very specific things continue to happen.
Okay, let me guess. Number one, home prices have to keep going up forever.
Correct. As long as the market is hot, new buyers keep lining up to give you cash up front. No problem.
And number two,
Yeah.
you have to be able to keep borrowing new money to pay off the old IOUs when they finally come due.
You've got it. The whole system relies on an endless flow of new credit. It's what financial analysts politely call a Ponzi-adjacent structure. You absolutely need fresh cash inflows to pay off your past liabilities.
And Hui Ka Yan, he wasn't just sitting on this mountain of cash and IOUs, he was spending it. Which brings us to part two of this saga, the empire of stuff. Because looking back at their diversification strategy now, from our 2026 perspective, it's wild. It's completely unhinged.
It is classic corporate hubris. You see this pattern again and again in business history. A company completely dominates one sector, and the founder or CEO starts to believe they have the Midas touch.
They think, I'm a genius at building condos, therefore I must also be a genius at raising pigs.
Precisely. The logic doesn't have to make sense. The belief is in their own brilliance.
So let's start with the most visible part of this empire, the sports team, Guangzhou Evergrande FC.
This was actually, in the beginning, a brilliant marketing move. They bought the team in 2010 when it was in a bit of trouble.
And they just poured money into it.
An unbelievable amount of money. They bought the best foreign players from South America and Europe. They hired world-class coaches like Marcello Lippi, who had won the World Cup with Italy. And it worked. They started winning everything.
They won the AFC Champions League in 2013, which is a huge deal in Asia.
It is. And it put the Evergrande brand on the map across the entire continent. It associated the name Evergrande with victory, with national pride, with excellence.
So when you bought an Evergrande apartment, you felt like you were buying into that winning team.
That was the idea. And they doubled down on it. In 2020, they even started construction on a new stadium in Guangzhou.
The pictures of this thing are incredible.
It was designed to look like a giant glowing lotus flower. It was going to hold 100,000 people, one of the biggest soccer-specific stadiums in the world.
But then, the logic starts to get a little fuzzy. Let's talk about the water. Evergrande Spring.
Oh, the water. Yes. So in 2014, they decide, for reasons that are still a bit baffling, that they are going to dominate China's premium bottled water market.
And to launch it, they hired one of the most famous people on the planet.
They hired Jackie Chan.
Of course they did.
They spent a fortune on advertising, on Super Bowl-style TV commercials. But this whole venture is a perfect example of how throwing money at a problem doesn't guarantee success, especially if you don't understand the new industry. They made a critical, almost amateurish mistake with the branding.
The label controversy.
The label controversy. So they sourced the water from a mountain range on the border between China and North Korea.
Okay.
Now, in China, this mountain is called Changbaishan. But in Korea, it's known as Mount Baekdusan, and it's a deeply sacred, culturally significant site for Koreans.
I think I see where this is going.
Evergrande slapped the Chinese name Changbaishan on the label and started trying to sell it all over the world.
Including in South Korea.
Including in South Korea. The backlash was instantaneous and furious. South Korean consumers were outraged. It was seen as a cultural appropriation, a political statement. It became a diplomatic incident over a bottle of water.
It's just incredible. You have a real estate developer accidentally starting a geopolitical feud because they didn't do a 5-minute Google search or run a focus group.
And financially, it was a complete and utter disaster. They lost something like over $500 million US on their water, dairy, and grain businesses before they finally sold them off in 2016.
Wait, dairy and grain too?
Oh, yeah.
Yeah.
They were in everything. And pigs. We can't forget the pigs.
Right. In 2016, they invested 300 million yuan to build 110 pig farms in Guizhou province.
Uh-huh.
I mean, why? What is the strategic link between building a 50-story apartment tower and raising pigs?
Well, there are two ways to look at it. The charitable interpretation is that pork is a staple food in China, and pork prices were rising, so they saw a business opportunity.
Okay, that's the charitable view. What's the cynical one?
The cynical view is that it was always about the land. Agricultural land is much, much cheaper to acquire from local governments than residential land. So the theory is you acquire huge tracts of land under the guise of building pig farms, and then maybe, just maybe down the line, you can get it rezoned for property development. Or at the very least, you use the land itself as collateral to get more loans.
It always comes back to land and loans.
Always. But the biggest side quest, the venture that truly became a black hole for capital, was the car. The Hengxi dream.
This, in retrospect, really does feel like the nail in the coffin.
It was the peak of the hubris. In 2019, Evergrande boldly announces they are going to become the world's largest and most powerful electric vehicle manufacturer.
Not just a manufacturer, the biggest.
Bigger than Tesla, bigger than Volkswagen.
And at this point, they had never built a car before. They'd never manufactured so much as a scooter or a bicycle.
Nothing with wheels.
Mm-hmm.
And Hui Ka Yan's strategy for achieving this was, well, it was summed up perfectly in a speech he gave. His official strategy, and I'm quoting here, was buy, merge, 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 big, big, big.
That sounds like something a villain in a 1980s movie would say. That can't be a real corporate strategy.
It was, and he meant it. Since they had zero research and development, they decided they would just buy it all.
So what did they buy?
Everything they could. They threw $2 billion at a stake in a struggling American EV startup, Faraday Future. They bought a Swedish car company, NEVS, outright. They bought a Dutch company that made in-wheel motors. They bought a Japanese battery technology company. They were trying to stitch together a car company like some kind of Frankenstein's monster just by writing enormous checks.
And after all that buying, did they ever actually make a car?
Barely. They produced a few hundred of one model, the Hengxi 5, but they held these huge, flashy events where they'd show off 9 different prototypes at once. The problem was, none of them were ready for mass
It
production.
was all just for show.
It was theater to impress investors and, crucially, local governments. And we now know, looking back from 2026, how hollow it was. In June of 2024, the Chinese government officially ordered the EV unit to repay 1.9 billion yuan in state subsidies.
Why? Because they never actually delivered on their promises.
Because they failed to meet their contractual obligations. They took the money but never built the factories or produced the cars they said they would. The whole thing was a shell.
And all of this empire of stuff, the cars, the theme parks, the water, the soccer team, it all required a constant, massive fire hose of cash to keep it going.
A fire hose that was being supplied by the property development business.
And in 2020, someone in Beijing finally decided to turn off the tap.
They didn't just turn it off, they smashed the faucet with a sledgehammer.
This is part 3, the turning point, the policy known as the 3 red lines.
To understand why Evergrande and the whole Chinese property sector fell off a cliff, you have to understand the mindset of the government in Beijing in 2020.
They were getting scared.
They were terrified. They looked at the property market and they didn't see a vibrant engine of growth anymore. They saw a bubble, a massive debt-fueled bubble that was threatening to swallow the entire Chinese economy.
And this is when President Xi Jinping came out with that famous slogan.
The one that sent a chill down the spine of every developer in the country: property is to be lived in, not to be speculated on.
Now, you hear slogans from governments all the time. Markets usually just shrug them off. Why was this one so different?
Because they backed it up with policy, with cold, hard mathematical rules. The People's Bank of China and the Ministry of Housing got together and issued the 3 red lines policy.
And this wasn't a suggestion.
It was not a suggestion, it was a direct order to the banks. If a property developer crossed these lines, the banks were forbidden from lending them any more money. Full stop.
Okay, so we absolutely have to understand these 3 lines. They are the murder weapon, so to speak, that killed the old model. What were they?
They're a bit technical, but we can break them down pretty simply. The first red line was a liability to assets ratio of less than 70%.
In simple terms.
Basically, the value of everything you owe can't be more than 70% of the value of everything you own. It's a measure of your overall indebtedness.
Okay, red line 1, what was the second?
A net gearing ratio of less than 100%. This one compares your total debt to your total equity or ownership stake. It's a measure of how much of the company is funded by debt versus the owner's money.
So far, so good. Who's the third one?
The third one was, in my opinion, the most critical for day-to-day survival. It was a cash-to-short-term debt ratio of at least 1.
That one sounds like the most direct gut punch.
It is. It's a very simple, brutal question. Do you have enough cash in the bank right now, today, to pay off all the loans and bills that are due in the next 12 months? You need at least $1 of cash for every dollar of short-term debt.
And how did Evergrande do on this test? 1 out of 3, 2 out of 3.
They crossed all 3 red lines. They were deep in what the government designated as the red zone.
So the government effectively sent a memo to every bank in China saying, cut them off, no more loans.
immediately. And you have to remember their business model.
The Ponzi adjacent one.
The one that needed a constant flow of new loans just to pay off the old loans and the old IOUs.
So when the new loans stopped,
The entire machine just seized up. It was like throwing a wrench into the gears of a massive engine. They couldn't pay their suppliers. The suppliers walked off the job sites. Construction on hundreds of apartment buildings just stopped.
and the home buyers, the people who have paid all their money up front, they see the construction cranes stop moving.
And they panic. Many of them stopped paying their mortgages in protest. It became a full-blown death spiral.
The desperation inside the company at this point must have been just off the charts. I remember reading the reports about how they started trying to get money from their own employees.
Yes, this is one of the darkest and saddest parts of the whole saga. They essentially forced their own staff, from executives down to receptionists, to buy high-yield wealth management products that were issued by the company.
They were forcing their employees to loan the company their life savings.
Pretty much. The message was, if you want to get your bonus or maybe even keep your job, you need to invest in these products.
That is just, it's beyond predatory.
It's the sign of a company that knows the end is coming and is just trying to grab any cash it can to survive for another day.
So that brings us to the collapse itself, the slow-motion train wreck that played out from 2021 through 2023.
By the summer of 2021, the cracks were no longer hidden. They were giant canyons visible to the entire world. They started missing payments on their international bonds.
The junk bonds we talked about earlier.
Yes. The rating agencies Fitch, S&P slashed their ratings and eventually declared them to be in restricted default. And the numbers that started to come out in their financial filings, they were just staggering.
Their total liabilities eventually stood at around 2.4 trillion yuan.
Which is roughly 340 billion US dollars.
I just want to pause on that number again. $340 billion. That is more than the entire annual economic output of countries like Finland or Portugal.
It's more than the GDP of New Zealand. One single company owed more money than entire developed nations produce in a year.
And the big fear at the time in September 2021 was contagion.
The Lehman Brothers moment. That was the phrase on everyone's lips. If Evergrande collapses, does it take the banks down with it? Do all the other property developers fall like dominoes? Global stock markets were plunging on this fear.
But unlike with Lehman Brothers in the U.S. in 2008, the government in Beijing didn't step in with a massive bailout.
No, they made a very clear choice. They wanted to manage the demolition. They wanted to prick the bubble without blowing up the entire economy. So they let Evergrande suffer the consequences.
Which led to Evergrande filing for Chapter 15 bankruptcy protection in New York in August 2023.
Right.
Why New York? The company is Chinese. It's listed in Hong Kong. Why file in Manhattan?
It's a legal move. Chapter 15 is for foreign companies. It essentially asks a U.S. court to recognize the restructuring efforts happening elsewhere and, crucially, to protect any U.S.-based assets the company has from being seized by creditors while they try to work out a deal.
But it was too little, too late. The restructuring plans never really came together.
No. And when trading of their stock finally resumed in Hong Kong after a 17-month halt, the market delivered its verdict.
The stock plunged 79% in a single day.
It went from a peak of over 31 Hong Kong dollars in 2017 to just 35 cents. It was effectively worthless.
But up until this point, you could still, if you squinted, frame this whole story as a colossal business failure, a tragedy of hubris and too much debt.
You could. A very, very big failure, but a failure nonetheless.
But then we get to part 5, the fraud. And the narrative changes completely.
It does. This is where the story shifts from bad business decisions to a coordinated criminal enterprise.
March 2024. The China Securities Regulatory Commission, the CSRC, finishes its investigation and drops an absolute bombshell. What did they find?
They found that Evergrande hadn't just been struggling. They had been lying. On an industrial, almost incomprehensible scale, they had been systematically overstating their revenue for years.
And the numbers.
The numbers are just insane. In 2019, they inflated their revenue by 214 billion yuan. That was about half, 50% of their officially reported income for the year.
So half the money they said they made in 2019 was fake.
Half of it was fake. And then it got worse. In 2020, they inflated their revenue by nearly 350 billion yuan.
And what percentage was that?
That was almost 80% of their reported revenue.
Wait. Let me get this straight. 80%. So you're telling me that for every dollar Evergrande claimed to have earned in revenue in 2020, 80 cents of it was completely imaginary?
Essentially, yes. The total overstatement across those 2 years was nearly 78 billion US dollars.
How? I mean, physically, How do you fake $78 billion in revenue? You can't just add zeros to a spreadsheet, can you? There has to be a mechanism.
There is. And it goes back to a seemingly boring accounting principle called revenue recognition.
Okay, explain that.
In property development, the generally accepted conservative accounting rule is that you cannot count the money from selling an apartment as revenue until the project is finished and you actually hand the keys over to the buyer.
That makes sense. Because until then, if you fail to build the house, you technically owe them the money back.
Exactly. Until you deliver the product, that cash you received is a liability on your books, not revenue.
But Evergrande just decided to ignore that rule.
They decided to create their own reality. They started recognizing revenue way, way earlier in the process, sometimes as soon as a contract was signed, years before the building was even close to being finished. They were essentially using an accounting time machine.
They were pulling money they hoped to earn in, say, 2023 and claiming they had already earned it in 2020.
Precisely. And this had two massive and very deliberate effects. One, it made them look incredibly profitable on paper, which kept their stock price high and made investors happy.
Okay.
And and this is the absolutely crucial part, by inflating their revenue, they were also inflating their assets. And that allowed them to pass, or appear to pass, the debt ratio tests, which in turn allowed them to borrow even more money to keep the whole scheme going.
It's a perfect circle of fraud. You fake the profit to get the loan, which you use to start a new project, which you use to get cash up front from buyers, which you then book as fake profit.
It's a self-perpetuating machine, powered by lies. And that $78 billion figure. I mean, just to put that in perspective for everyone, the famous Enron scandal was about $1 billion in fake profit. The WorldCom fraud was around $11 billion. This isn't a completely different universe of deceit. It is, by a huge margin, the largest financial fraud in history.
Which brings us to the question that has just been burning a hole in my mind since I first read these reports. Where were the watchdogs?
Yes.
You don't hide $78 billion under a mattress. This company was a publicly listed giant. Somebody had to look at these numbers. Somebody had to sign off on the audit.
And that somebody was PricewaterhouseCoopers, PwC, one of the big four global accounting firms, the supposed gold standard of financial verification.
They were Evergrande's auditor for more than a decade.
They were, and they signed off on the 2019 and 2020 financial accounts, the very years with the 50% and 80% fake revenue, without raising any major red flags. They gave it a clean bill of health.
How is that even possible? I mean, at this level, are we talking about gross incompetence? Or are we talking about complicity?
That is the multi-billion-dollar question that liquidators and courts are still trying to answer. The official investigation from the Hong Kong accounting regulator found that PwC failed to gather sufficient audit evidence. They noted that Evergrande itself had raised going concern risks in its half-year reports, but PwC didn't reference this in their final audit.
So the company itself was hinting that it might go bankrupt, and the auditor just ignored it.
They didn't highlight it in their final opinion. Now, PwC eventually resigned as Evergrande's auditor in January 2023, citing disagreements over the 2021 audit. But by then, the damage was long since done. The house had already burned down.
And the punishment from the authorities, when it came, was severe.
It was historic. In September 2024, the Chinese Ministry of Finance took an unprecedented step. They suspended PwC from operating in mainland China for 6 months.
A 6-month ban. For a major accounting firm, that's not just a slap on the wrist, that's a death sentence for your business there.
It really is. Your clients can't wait 6 months for you to be allowed to work again. They have audits they need to file. They have to leave you.
And they did.
There is a mass exodus. Dozens of major state-owned and private companies dropped PwC as their auditor. And there was a mass exodus of staff. By June of 2025, we know that at least 30 partners in the Hong Kong office and another 77 partners in mainland China had left the firm. The brand was just decimated in the region.
It really just shakes your faith in the entire financial system.
Yeah.
You see that stamp on a report that says audited by PwC, and you're conditioned to think, okay, these numbers are real. They've been checked.
And this is a brutal reminder that an audit is not a guarantee. It's an opinion based on the information that the company's management provides. And if the management is fundamentally determined to lie and the auditor is, let's be generous and say, not curious enough, catastrophe happens.
So let's bring the story to its bitter end. January 2024. The liquidation.
Yes. After months and months of failed restructuring talks, a judge in the Hong Kong High Court finally said, enough is enough. There is no viable plan here. And he ordered the company to be liquidated, to be wound down.
But that created this fascinating and very complicated legal mess.
It did. because you have a court in Hong Kong issuing an order. But 90% of Evergrande's assets, the actual buildings and land, are in mainland China.
The famous one country, two systems problem.
In a nutshell, the liquidators, a big international firm called Alvarez and Marsal, were appointed, and their job was to try and seize assets in the mainland to sell them off and pay back the creditors, especially the foreign bondholders.
But the courts and the local governments in the mainland had a very different set of priorities.
Their number 1, 2, and 3 priorities were social stability. Their main concern is finishing the apartments for the millions of people who have already paid for them.
Keeping the local citizens happy is more important than paying back a hedge fund in New York.
Infinitely more important. That's the social contract in China. So the local governments effectively seized control of many of the projects to ensure they got completed. The foreign bondholders, who are owed billions, they were pushed to the very back of the line.
So if you were one of those investors who bought the junk bonds paying 12%, you're likely getting, what, close to zero?
Pennies on the dollar if they're lucky. It's a very, very expensive lesson in what's called structural subordination. Your claims as a foreign creditor are subordinate to the claims of the domestic system.
So here we are, February 2026. The company is officially delisted and dissolved. Hui Ka Yan is under police control. The auditors are disgraced. The investors are wiped out. What is the lasting legacy of this whole disaster?
I think it marks the definitive end of an entire era of China's economic model. That build, borrow, build engine, which was fueled by a constantly rising property market, powered China's incredible growth for 30 years, and it's gone. It's over.
And now they have to find something to replace it.
Right. China is now trying to pivot to what they call high-quality growth, things like advanced manufacturing, green energy, artificial intelligence. But that transition is proving to be incredibly painful. The property sector used to account for something like a quarter of China's entire GDP. You just can't replace a hole that big overnight.
And what's the lesson for the global investor? For that person in London or New York?
It's a brutal reality check. It proved that the China premium, that old idea that you could get high growth with an implicit government guarantee behind it, was a mirage. The political and systemic risks are very, very real.
I want to leave our listeners with one final provocative thought, something you touched on earlier. We know the whole story of Evergrande now because they collapsed. They got caught because the music stopped and they ran out of cash.
Yes, their failure exposed the fraud.
But if this practice of aggressive revenue recognition was considered, let's say, standard practice in the industry at the time, and if the world's biggest auditors were willing to sign off on it.
You're asking the big question. You're asking if there are other Evergrandes still out there, maybe ones that just manage their debt a little better.
Exactly. Are we looking at one singular, uniquely bad apple? Or was the entire orchard rotten during that boom period? Because if $78 billion of revenue at one company can just be conjured out of thin air, how can we be confident that any of the spectacular numbers we saw coming out of that era were real?
That is the terrifying question that I think keeps a lot of people in finance awake at night. When you look at the debt loads and the accounting practices of other major conglomerates that were operating under the exact same incentives, with the same auditors and the same regulatory environment, it really makes you wonder if we've actually seen the bottom of this crisis yet.
A sobering thought to end on. A reminder that the numbers on the screen are only as good as the people who are typing them in.
Indeed.
That's all we have for this deep dive into the spectacular rise and the even more spectacular fall of Evergrande. A story of ambition, of fraud, and of a $300 billion reality check. Thanks for listening. We will catch you next time.
Goodbye.